It's really nothing. Time and time again, we're looking back at that screen. Actually, it's now a cut of about 0.5%. So stand corrected there. Down 300 points on the Sensex and 19,636. You've got Tata Steel, HDFC AMC, Tata Consumer, DLF, L&T, Hero Motor. So a lot of heavyweights that are feeling the heat. But let's move right on then, and anything but feeling the heat when it comes to Thermax. It's been a pretty decent set of numbers. Industrial products, infra, that's what's really driven the top line growth. And Ashish Bhandari, MD and CEO, is here with us to discuss the road ahead. Thanks so much for taking time out. And that's exactly the point, because it was muted commentary that you'd given in the previous quarters. But despite that, your order inflows have remained quite healthy. So what has been the inquiry pipeline and how is the rest of the year looking?
A very good morning to you and to all your viewers. I think I've been pretty consistent in my messaging. That while we don't see big orders coming in, we see a fairly healthy pipeline, which is cross-segmental, which is deep, and that is what is showing up in our numbers. Almost across all of our products, whether it be water, wastewater, environment and pollution control, heating, waste to energy, some of our larger boilers that go into steel, cement, everywhere we have seen strength. My comment previously was also that the biggest orders that we get, these are 500 crore, 1,000 crore plus kind of orders, which we have had in the past, that come primarily from refining and power. There, our pipeline was muted. That was my only comment. I was always reasonably bullish on orders and continue to be reasonably bullish on orders.
Sure. So, Ashish, I'll just flip that question in a different way, because I was reading a Macquarie note and they are very, very positively surprised by your order inflow, and they're saying 15% ahead of their own estimate. Do you think there was some sort of bunching up, etc., that happened in the quarter gone by with that order inflow of 2,600 crores? Or this is likely to be sustainable given there are a lot of those small orders that you're bullish about?
So I think our pipeline continues to be healthy, reasonably bullish. We can't see the whole year already, but what we see right in ahead of us, we have some amount of confidence that that we can sustain a bit of this momentum. So, and that was my messaging all through. I think even last time when the question was, my only commentary was, I don't see any big orders coming in, but I see reasonable strength across our portfolio, and I stand by that.
I have a simple question. You're sounding bullish. Order book is doing okay. There is a serious tailwind in the industry. But if I look at a very simple matrix, that is ROCE, and I'm looking at March 2019, before COVID hit the world, it was 17%. March 2023, it is 15%. If the tailwind is so strong and if the operating leverage has kicked in, if capacity utilization is going higher, and since your business does not need too much of capital to grow, why have you not gone back to your March levels? Why are you below that?
Okay, so two simple answers to what you are sharing. Our ROCE is a mix of what our businesses generate and the cash that we have on our books. Where we stand today, the cash that we have on our books is more than 2,000 crores, and that is invested in primarily low risk debt, and that brings our return on ROCE down. The second bit which you will see changing, and I don't think ROCE across Thermax is the right metric to look, because we are in a phase that we want to invest in as well. And we will be investing in our chemicals business, putting up a new water plant. Some of the hydrogen and the new energy areas will require investment. But a big area where our money is already going and has been going for the last couple of years is growing our green utilities and our related solutions business, where we are doing build own operate models for biomass based solutions, and then also for wind and solar hybrid based solutions. So these are places where our money will start to get deployed as well. And as you go through that initial portion of deployment, the returns are a little lower because many of them are much longer contracts. So the initial part you deploy money, and over a period of time is when the cash flows come in. So our ROCE profile at the Thermax level will change. A good way to look at our ROCE is by segment, and there our ROCEs continue to be healthy and are improving, if anything.
What is the strategic purpose of sitting on 2,000 crore of cash? Ultimately, either it has to be for acquisition or you are preparing yourself for a downturn. There is no downturn. Thermax is not known for acquiring a lot of companies. You're not a company which has built their growth around inorganic strategy. So why not a buyback? Why not do a fat dividend payout?
Look, our board has thought about and discussed all of these options. Yeah, I would say three things then. First, a fair bit of our cash, we are a conservative company. Yeah, and we will make sure that we are healthy enough to go through not just a good cycle, but through any cycles that may come about. Second, as I said, that we are in a period where we want to invest. Yeah, and you can see this 2,000 crores has been somewhat flat for a couple of quarters. It's not being added on while we are generating a fair bit of cash flow from operations, because we are now starting to invest as well. And we will continue to be in investment mode for some period of time. Third thing, some of our cash, which we have, is because we run a negative working capital as a company. So this cash actually belongs to our customers for projects, etc. And these we always set aside as something that we don't count as part of our long-term cash flow, which we think we can give back to our shareholders any which way. So as a net of all of these things, our board constantly looks at where our cash position is, what should our best deployment of cash is. And as things stand, based on all the three things that I mentioned to you, our decision is that we will continue with the keeping this kind of a cash flow and being on the path that we are on.
So keeping that cash for now, but Ashish, I have to ask you a question on the margins as well, because for the industrial segment, of course, the legacy orders seem to be eating into your margin. How long will that continue? When do you see a reversal in the industrial infra margin segment?
Industrial infra was a very tough quarter. We had a couple of very specific projects where we had kind of relatively lower margins that got closed out. So the hit relating to closing those projects out, we showed on our books. We also have our FGD projects, which are relatively low profitability, that are going through advanced execution right now. That said, I think you should see the margins improving as we go through the year. Yeah, Q1 was particularly difficult. I've always said, see, part of the reason of showing our Thermax as a company the way we are, so that our investors get an insight into how we run our company. And we have said we would like to make industrial products as the place which is relatively less volatile, will still get affected by industry downturns and upturns, but shouldn't be affected by a single project, so to say. Yeah, and we continue to work that systematically towards a place where we show continued improvement in profitability, continued growth of services, digital, all of that. Green utilities should also be pretty consistent. Chemicals, if the chemical prices, the input costs don't go up, should also be relatively consistent. It is in our EPC and our projects business where, because we do large projects, depending on how a single project looks, both the orders and our PBT profile will move around a little bit, even though, or more than a little bit, as this quarter was an example, even though our effort and our attempt is to make sure that orders that we get in, given we have a decent pipeline, we have decent manufacturing utilization, continue to be of a more profitable kind. I guess that's as clearly as I can put it.
Sure, but just to summarize, can you then say that we have seen the worst of the margins this quarter and those legacy orders are close to completion?
No, I think some orders are close to completion. Overall, our backlog, even on the project side, is high, and there are a couple of areas which we continue to monitor. But in the relative scheme of things, Q1 was a tougher quarter in that sense.
All right, thanks so much for taking time out and joining in, and good to hear that positive, that optimism rather in your voice. So yeah, cash conservative, but as of now, a healthy pipeline is what the company is saying, and they will continue to invest across segments and maintain and sustain that order inflow. 2589, that's where Thermax is currently at. Let's move right on then and connect with another corporate voice.